difficult to predict in the near term, but I would think that the proportion of Asian or emerging market flows that India has got, that's been disproportionately high in the past few months. There are reasons behind it. India is possibly one of the only large liquid emerging markets that's doing reasonably well in terms of improvement in macroeconomic variables and improvement in the earnings environment, while the larger neighbors like China and Korea have been victims of investment outflows from these markets. I would say that in 2014, the total quantum of FII investments in India could turn out to be similar or maybe slightly lower than we had seen in 2012 and 13, which were about $20 billion in the equity markets, roughly. So we may get somewhere around 15 to 20 billion, and the only reason for this dragging down of the FI inflows could be the decline in liquidity that's being injected in the global markets by way of QE. We expect tapering of QE, which is currently proceeding at a rate of $10 billion per month, to continue till the end of the year. We think in 2014, this outperformance of India relative to the other emerging markets is likely to continue. We have a Sensex target of 24,000 by the end of 2014, and I think the reason behind this is the continuation of improvement in the macroeconomic variables and the earnings environment that we have seen over past 2 quarters. The valuations are they're not really cheap, but they're not expensive either. India is currently trading about 14.5 times 1-year forward PE, which is at a small discount to the long-term average that it is traded at. This combined with the superior inflows that we have seen should actually take the market to the levels that we're talking about. I think if a strong and stable government comes to power, there are quite a few administrative decisions that they can take to help the investment climate. In particular, I would think that one variable that's been missing from the investment climate over the past couple of years, and that's corporate confidence, that could potentially return. And it may be not really something very tangible, but it's an important ingredient towards the improvement in the investment climate. And if that is coupled with acceleration of some administrative decisions that the government can take, then that would obviously be the icing on the cake. So, on net balance, yes, I think it's going to be a long haul for any government to improve the investment climate sustainably. But there are some elements, some components of the investment climate that can improve.